recent years, we've heard a lot about this concept of local content, particularly as it relates to the way that we're trying to maximize the benefits that come from exploiting the natural resources that we're finding across the African continent. But how do we effectively implement a local content policy? What are the things that we need to take on board and consider and balance against each other as we look to maximize investment on one hand and local participation and benefits on the other? Joining us on the program today is Dr. Michael Warner. He is the former manager for local content and supply chain sustainability at the BG Group and has extensive experience in the corporate sector dealing with local content. For the last 8 years, he's been training and advising decision makers both in the corporate sector and in the government sector on how to implement and follow up on local content policy, agreements, and decisions. Dr. Michael Warner, welcome to the program.
Thank you.
So I just want to start with a very broad question. We hear a lot about this concept, local content. Why is it so important and why is it coming up now, particularly as it relates to what we call the extractive sector?
Well, in Tanzania, you've had recent discoveries of gas reserves offshore, and that's what's waking everybody up. So the authorities here in Tanzania and the general public will have heard about local content from other African nations, Nigeria, Ghana, Angola, and they're asking themselves, so what's in it for us? There's a large investment coming, possibly. Will we get jobs? Will our local companies hire us? And the local companies are asking themselves, will we win jobs to provide goods and services?
Okay. And what does good local content look like? I mean, what is it that we're aiming for when we say, yes, we want to implement local content? What exactly is it we're dealing with here?
I think first and foremost, you'd answer that by saying, what can the local market of suppliers and labor provide? Are there people in the Tanzanian society that can weld joints, can provide accommodation, can drive haulage trucks, can provide equipment and materials? If those people exist and those companies exist, then they need an opportunity to be recruited or to bid for work and gain that opportunity.
So it's really about now how you're getting, say, if we're in Kenya, it's about getting Kenyan companies now linked into what we'd call value chains relating to extractives. Is that?
That's right, but generally on a competitive basis. So they need to be able to win the work. If it's a local company providing a subcontractor workforce, labor force, or a supplier providing goods or materials, they need to be able to be competitive enough on price, have the right specified equipment or materials, labor qualified to win the work in a competitive bid.
Is there such a thing as too much local content? Like, can we go too far with this, or is it, this is great, this is what, we should maximize this to the greatest extent possible? Is there such a thing as too much local content?
In my opinion, yes, there is, and this is the big debate at the moment. So it's 2016 now, it's not 2013. There's depressed gas prices and mineral prices. So governments are asking themselves, shall we or are we pushing too hard on giving opportunities to local companies when if those companies are not skilled enough or do not have the expertise in providing the goods, and yet we carry on instructing these operators to buy from these companies, then costs can escalate. And cost escalation in 2016 is a no-no.
At the other extreme, what does no local content look like? Is that even a viable option? Does that exist anywhere?
And I think, again, that's on the other side. That's the political side of this equation. So if you don't have any local content, particularly if there is capable skills and suppliers in the economy, and they are not given the opportunity to bid for work or be recruited, and they feel they've been left out of genuine opportunities that they could participate in, then you now have a social or political problem on your hand. And this is the balance between the two. Push too hard and prices go up, projects get delayed. If you pull back too much, then the genuine opportunity in the country cannot realize their potential.
And what kind of principles, like guiding principles or maybe frameworks exist or at least should be taken on board for the decision makers who are now looking for this appropriate balance?
It's a good question. Understanding the capabilities in the local market, I think, is probably one of the key principles. There's no good regulators writing legislation or companies having strategy on local content that says, yes, we're going to buy from the local market these products or services, if you don't know what the market can deliver. So I think that's the first principle, is understand the local market. I think probably a second principle is understand what the ambition is, how much local content would be available in the market, and how much are you going to stretch that. Encourage companies to buy a bit more, recruit a few more, and understand that as you stretch local content, you have to package around it training and support for suppliers. And that's the big debate. How much do you stretch local content?
Sure. And what kind of sectors are we talking about when we say these kind of additional parts of local content? Construction, logistics, you've mentioned, or at least it's come out to me about, say, agriculture, if we're feeding. Are these, is that it? Or are there ones that are specific to whether it's oil and gas or mining? What kind of sectors are we looking at?
Yes, I think sectors within the supply chain depends on the sector you're in. So if it's agriculture, it'll be inputs into that industry. If it's oil and gas, then it's the supply chain for oil and gas.
And how does a country go about, or a sector go about, identifying which are the ones where, okay, we have the present capabilities, but then there are others where there's a bit of potential to grow? You can't do everything. So how do you go about selecting, okay, where's the best place to invest? Capacity development is expensive, for example.
Right, so that's it. It's effectively a cost-benefit analysis. So you first of all work out what I would call the cans, the greens, if you think of a traffic light, what can be done in the economy. And then you also identify the reds, the no-goes. There's no way in the next 10 years that Ghana is going to be able to manufacture, as an original equipment manufacturer, compressors. It's not realistic. But is there an area in the middle where more could be done? And then to answer your question, it's analysing the best bang for the bucks. Where could the government or the companies or the supplier sector invest that would enable that local labour market or supplier market to capture more work? Now, you don't want to invest a great deal in building a fabrication yard or supporting a fabrication yard in country and then find that they are given one small accommodation module and that's it. And all of that investment is even less value than the project that they won back. So we have to find the strategic opportunities. And the hunt for that is part of the forecasting of local content when a major project arrives in town.
I'm glad you've brought up this issue of forecasting. So extractives, typically, we're talking about non-renewables. There will be an end. The rig or the mine or whatever it is will be decommissioned. Now, all these industries, how do they survive beyond that? If we create this value chain, once the linchpin is gone, what's now the prospect of that? That's a huge investment you're making. How do they kind of graduate from being dependent on that particular sector or mine or whatever it is?
So that's where the size of the opportunity comes to play. So if you take Tanzania and Mozambique has found huge gas reserves. And Tanzania, in terms of the public domain, we see possibility, but we're just not looking at the moment as large as Mozambique. So in Tanzania, there may be at some point a large project for LNG. And that is a spike of what we call capital investment, capital expenditure. Now there you have to be very careful that if you start to develop more local content, then as you're suggesting, those skills and that capability in the local supplier market must be transferable to other industries. So that would be all your logistics, or your civil works, construction works, that type of support. If you're in Mozambique, and if, as the gas price rises, we find that those opportunities are realized, possibly there'll be one project followed by another project, followed by another project. Now that's a different scenario. Now one can see that you can develop expertise in the country and skills and capability that could supply multiple projects over 20 years. And that's a whole different game.
Sure. And this idea of transferring skills, I'd assume also applies now to looking at, say, a region. A lot of what we hear about local content seems to be a very nationally driven agenda. I'm growing my Tanzanian economy, and to an extent I will be competing with Mozambique, with Kenya, my neighboring countries. And yet, the economies of scale for some of these services that we're trying to grow would depend on a regional model. How do we balance that kind of friction between saying, okay, this is what we want to focus on as Tanzania, and maybe we'll allow, or maybe we won't compete in these other areas, say, that Rwanda wants to specialize in, or Malawi, or whoever it is? Is there a way that local content might actually get in the way of that kind of cooperation?
Yes, I mean, the issue for me is that that's a theoretical example you've given. Of course, you're right, theoretically. It ought to be possible for comparative advantage. We've had 50, 70 years of international trade based on comparative advantage. You have a regional trade body and you agree, just like you've said, that one country will focus in this area and then we will not focus in another area that another country is operating in. That's common sense, that's rational, but it's often not the politics, the reality of the situation. So it's not for me so much that local content gets in the way, is that local content may be the reality of what you have. If you have a project, a large project on the horizon, and you have 1.5 years, 2 years to build capacity to capture 30% more work than you other would do in your economy, you're not going to be worried about long-term 5-year trade negotiations. You're going to be trying to capture as much as you can.
Sure. And you've also mentioned there's this kind of balancing act between, say, the suppliers on one hand, in terms of how they are part of the local content, and labor on the other. What are the tensions here that need to be considered when we look at, implementing an effective local content plan or strategy?
I think that you have to understand, particularly in oil and gas, less so in mining, that if there's a new project and a new expansion, a large percentage, 80-90% of all of that expenditure will go out through some major contractors. Often international firms, sometimes large national firms. So the opportunities for labour lie in the expenditure of those contractors as they buy in labour for their own labour force temporarily for construction, or they hire subcontractors and suppliers who then need labour, either in manufacturing or subcontracting. So the opportunities are down that value chain, down the supply chain.
Sure. And on the labour side?
So that's what I mean by the labour is the opportunities are down that supply chain. So the question then becomes, if you understand what the recruitment needs are of those major contractors and the subcontractors they hire, it's understanding those job descriptions, those qualifications, that level of experience that's needed down those chains, and then trying to map that opportunity onto who's coming out of the technical colleges, who's coming out of the universities. Do they have the right skill sets and experience to match those opportunities? So you need to scan down the supply chain, understand the demand side, and then map it onto the supply, the pipeline of skills.
And as you'd said, it's now 2016, and it's not 2012. The global context has shifted, where previously a state could almost dictate terms of local content. In an extreme form, we saw this in Angola. Now the market has shifted, the power has, in a way, shifted over to the investors. And it seems as though local content could be something that gives one country an edge to attract investment over another. Do you think there's any truth to this kind of perspective?
Yes, it's something that's being talked about at the moment, that relaxing your local content regulations might make you more attractive to inward investment from others. I think there's some merit in that. I probably wouldn't use the word relaxing. I'd be more tactical, more strategic, thinking through as a regulator now what do we know we can do, in which case we can push harder on that in our regulation. Where do we specifically want to build capacity because we want to build a niche, a cluster of expertise. So you push hard there, and then you relax what you require in the other areas. So I think there is an area here for some smart regulation on local content, and I think Sierra Leone is a good example of that in their 2016 Act on Local Content they've just put out, which a recent GIZ study has shown could potentially be more attractive than some of the regulations written in 2010, 2011 in some of these other oil-producing states. And
what makes Sierra Leone, just to stick with that, what makes it more attractive, as it were? What are the kinds of things that a country like Sierra Leone is proposing or putting on the table, as you say, to make it more attractive? What are the kinds of things that an investor will look for that kind of will tilt their decision in that way, rather than, say, Tanzania or Mozambique?
Okay, so I mean, perhaps the comparator here is Nigeria, where the regulations have a long list of targets at the back of the primary legislation. Sierra Leone is also primary legislation, and there's no targets at the back. There are a sprinkle of targets that are relatively achievable on percentages of nationals in different categories of positions, and the supply of raw materials into a few of the industries, but it's fairly minor in terms of having a long compared to a long catalogue of targets. And it's same with Brazil, same with Nigeria, and Ghana, where you have all these targets, and then the risk is that they were set higher than the local capability can meet. So I think that's one area. I think the other is more about implementation, as sort of more of a common sense approach. So Sierra Leone knows it's a small country. Their regulations for local content apply across all sectors, not just oil and gas and mining. Yes, and I would say there are reasonable expectations. There's nothing. It's not zero. I mean, they're pushing hard, but they're rolling out the different provisions in their act in a choreographed way. So they're starting with reporting. That's it. Report to us what you're currently doing on local content in workforce and suppliers. And let's get that data out there so we can see the map of what's actually happening. Now, reporting data in itself is not very expensive, and reporting data is a really good education for everybody, the companies and the governments, about what's actually happening. Once that data's out there, they'll start using the data to prioritize the other elements of the Act. So there's a staggered rollout of the provisions of the Act. I think that's a sensible approach.
Sure, and this idea that it's beyond extractives in Sierra Leone, what do you mean by that? Why is that particular to Sierra Leone, at least of the examples we've talked about?
I would say it's particular to where we are in 2016 with the decline in the markets for oil, gas and minerals. Also, Sierra Leone is a relatively small country. They're not producing oil and gas at the moment. So they are looking wider at their entire industry. And their industry is sort of, revenue is sort of agriculture, banking, some manufacturing, exploration on oil and gas, and then mineral production is the big one. So they wanted to capture their range of sectors in the country, and that's why their legislation is applied across the board. It's not that Sierra Leone is particularly special. I think you'll find over the next 3-4 years that new regulations or new acts coming out on local content may well end up looking at wider than oil and gas, and agriculture and banking or finance are two obvious sectors to look at.
And in terms of implementing this now at the government level, without being prescriptive, how do you tackle something like local content, which necessarily cuts across so much? I mean, do you coordinate it? Is there a ministry for this? Are there agencies? And how do you avoid the kind of politicking that it might be vulnerable to? So, how do we decide which companies we're going to promote and things like that? Or maybe from your experience, what frameworks have you seen that have been particularly effective? And then maybe some which have been less effective, and give the reasons why that may be the case.
Placing, if you're going across sector, then yes, you've got to ask yourself, so how are we going to coordinate this? Is there going to be a central agency that does it? So we talk about Sierra Leone. So in Sierra Leone, there is a single local content agency. Now, it has to sit somewhere. So sometimes you'll find that these type of agencies will sit underneath the cabinet, that has a sort of direct line to the higher level authorities, or will sit under the most relevant ministry. Then you ask yourself, so what's the most relevant ministry? Well, it could be the Ministry for Energy, Petroleum. It could be the Ministry for Mines and Energy, if it's that type of regulation. Or in case Sierra Leone, for example, it's the Ministry of Trade and Industry, which is quite interesting. So they obviously see the link in Sierra Leone between local content and inward investment and trade. So they're seeing that link, which is what the point you raised earlier. It is important where it sits. If it's too in the pocket of an existing ministry that has, for example, is trying to maximize revenues, then you can see that there could be potential conflicts of interest between a regulator that's trying to maximize or optimize local content, which may run risks for projects, deter investment, and eventually, presumably, revenues, versus a ministry that's above them that they're aligned into, which is trying to maximize revenues and get projects moving really early. So where you place that authority to regulate local content, I think is a very important one.
Going forward, is local content a new reality, or is this something that really it's common sense? Is it just a new name for an old phenomenon? Is it something that really we should have worried about before? Are we late to the ball? Why this issue?
You'll find local content clauses going back, for example, in oil and gas, in production sharing agreements, going back a long way. You'll find a strong policy push in the UK in the 1970s and 80s as the North Sea was being developed on local content, and everyone understands the Norwegian story. So local content is not new in the oil and gas sector. What's new is that as one looks at these investments going into Africa, at least if you take from sort of 2008 up to 2012, when the big investments were coming in, people were asking themselves, politicians and the local population, well, huge amounts of money, billions of dollars are coming into our country and being spent on buying services and goods and building assets. Where is the benefit for our country in that? Rather than everyone sitting around waiting and drumming their fingers, waiting for revenues to arrive in government and then be spent as public expenditure, which somehow then supports the population. So I think local content has risen up to the top of the agenda because of the high oil and gas and mineral prices. Now we're in a different world. The agenda is still there. The public have woken up to this. Where are our benefits? And the difficulty, the challenge for authorities is to now set the regulatory framework that will deliver on some of those expectations, but in an environment where they can't deliver on too many, or they'll push away, deter the investment in the first place.
Yeah. And just kind of one final question on this push of maybe a political pressure for local content. As we've mentioned several times, it is 2016. The market is as it is now for energy. What about this notion that the market will recover? We negotiate based on today's reality, but we're projecting somewhere else. Now, neither side wants to necessarily, and by neither side I mean the oil and gas companies or the extractive company broadly, and the state on the other hand, wants to lock themselves in too much. Yes. Because they do need that degree of flexibility down the line to make adjustments. Now, what have you seen in your experience of effective ways of making these kind of tweaks as the context changes?
Yes, I think that's a very good question. And I think it comes back to legislators, people who draft legislation or regulations, understanding about getting principles into those regulations and clauses that allow for revision. So I'll give you one example. If you're going to set targets for the number of nationals employed in different types of job categories or expenditure with certain types of suppliers and give them preferences, then it is safer to set a principle around that in the regulation, but then defers to a guideline or defers to an inventory of targets, for example, that can be modified in light of changing circumstances. And that's the difficulty right now that Nigeria has with having locked into primary legislation targets which now look quite ambitious. On the other hand, if I can be supportive of the Nigerian regulators, it's meant that they've had to be very creative in finding ways to manage that, and they have been, and it's one of the most creative regulatory authorities, the Nigerian Content Development Board. It's one of the most creative regulators on local content in the world. And that's partly because they've had to work around these very difficult targets. So build flexibility into that regulation in the first place.
And then as a follow-up, what about this issue of compliance? I mean, with flexibility now comes this question mark. Now, how do you impose, as it were? How do you keep people, I don't want to say effectively honest. There is a distrust between multinational companies and states where they don't seem to trust each other. So now, if I'm reporting something but I'm not really doing it, or if I'm the government and I'm expecting something but I'm not really telling you, and I kind of ambush you later on, how do you get over that hump, as it were? How do you get these two sides to partner rather than bicker over local content?
Okay, so this is where probably I need to put an informed opinion on the table. And I've oscillated. I mean, my background, I don't know if you know, comes from both working in the private sector, in corporations on local content, and advising as an independent regulators. Not in the same country, but I've seen both sides. And it may be where I am right now in my career, but I can see the need for regulation. Smart regulation, target regulation, and flexible regulation. But without it, I'm not so sure the private sector is going to play ball because it's not in their nature, okay? I come from a procurement function, but contracts and procurement department in a major corporation, and sat around me were procurement professionals who were trying to get the minimum price, the quality correct, take no risks, and everything delivered on time. Well, you're going to look globally for that. You're not going to look locally for that unless it's absolutely on a plate in front of you. So inherently, local content is a challenge for any procurement, contracting procurement function in any big company. So, because globalization is saying go arrange long-term contracts, framework agreements, negotiate bulk deals that reduce your price. That's globalization. Now we're up against the boundaries of globalization. We're up against a trend towards popularism, localization, and that's roughly what local content is. Now, how do you then persuade a company to play that game when it's inherently in their nature not really to play it, unless it's available cheaply at the right price, right quality, right in front of them? That's where regulation comes in. And that's where I currently sit. And we do need that regulation to be flexible for when the prices rise, but without it, I'm not so convinced that the companies will play the game in the way that politically governments need the companies to play in order to satisfy the demand in the country.
Sure. And just as we're coming to the end of the interview, we like to ask our guests, what your kind of key thoughts, or what's the kind of key message you would like the audience to take away when considering how to implement? I mean, what's the one thing you would want them to remember on either side, whether it's the government, whether it's investors, about the implementation and the challenge specifically of implementing local content?
Okay, well, the challenge, I think, on the implementation side, and I've said this for many years, you can boil down the strategy down to one single word: selectivity. You scan, you forecast what's available in the market, you match that to the demand that's coming, whether it's long-term operational demand of a mine or short-term large project, oil and gas, and you say, okay, so where can we be selective in how we structure our regulations, or companies structure their local content strategies, so that we definitely give the opportunities here. We don't give them here because the project will never get off the ground. And in these areas here, these clusters, these targeted subcategories, this is where we're going to work to build skills, to build local supply capabilities. So selectivity is the answer to how to deliver this in practice. And if I can, I would offer one other word as well, which is a consistent concept that I've been driving for the last 15 years, and it's this. It's not about maximizing local content, it's about optimizing. Optimal local content is striking within the context that you're in, the market scenario you're in, the balance between what is possible easily for a company and what is possible with a bit more of a stretch. Keep it within that bound and you have optimal local content. Don't push enough and you'll have a political backlash from society. Push too hard and the investment won't come. So you have to keep it optimal.
On that note, I'd like to thank you very much for coming on the program, and we would welcome you again anytime.
Thank you very much.
Thank you.
Thank you.